In episode 1, we broke down exactly why Iranian oil is the ultimate outlier. Once the Strait of Hormuz is locked down, 21 million barrels of crude vanish every single day, instantly freezing 20.4% of global trade. 3 red lines all completely shattered. But the kinetic war is only the first half. What actually impacts your daily life is the second half. If this conflict continues to escalate, will oil smash through $150 a barrel? Your 401k, your mortgage, the gas in your car, the groceries you buy, what happens to them? Can OPEC save the day? How many days will the US Strategic Petroleum Reserve actually last? And will China make a move? Welcome back to Hidden Lantern Chronicles. Let's do the math. There is an economic rule of thumb. For every $10 increase in oil prices, global GDP drops by 0.3%. If Brent spikes from $70 to $150, that's an $80 jump, meaning a 2.4% point drop in global GDP, which is more than enough to shove major economies into a deep recession. What's even more terrifying is inflation. Oil is the lifeblood of industry. Transport costs for almost every single commodity rely on oil prices. After the 73 crisis, US inflation breached 10%, prices skyrocketed, and every day people waited in massive lines just to pump gas. Getting down to your daily life, here is exactly what will happen. First, pumping gas will be way more expensive. The US national average is currently $3.02 per gallon. If crude hits $150, gasoline could easily blow past $5.2. Europe has it even flashing aggressive bullish sentiment, premiums on Brent call options are skyrocketing, showing that big money is betting on oil climbing even higher. The problem is, how much spare capacity does Saudi Arabia actually have? The IEA data says 1.8 million barrels per day. Meanwhile, Iran exports 1.3 to 1.5 million barrels a day. If Iranian exports vanish, Saudi Arabia's 1.8 million can barely plug that hole, but the world will have absolutely zero buffer left. The bigger headache: Saudi Arabia has its own bills to pay. The IMF estimates Saudi Arabia's fiscal break-even oil price is $86.5 a barrel. If they flood the market to crush oil prices, they'll be shooting their own economy in the foot. Who can save the day then? The US SPR? The US has one more weapon: the Strategic Petroleum Reserve. Currently, the SPR holds 415 million barrels of crude oil. Sounds like a lot, right? But the US consumes 20 million barrels a day. This reserve is only enough for 20.8 days. Moreover, the SPR's maximum drawdown capacity is 4.4 million barrels per day. In other words, if Iranian exports are completely cut off, the SPR can hold the fort for a little while, but only for about 3 months. In a prolonged blockade, it's useless. There is another player. Yes, China. China is the largest buyer of Iranian oil. In 2025, China imported approximately 580,000 barrels of crude per day from Iran, accounting for over half of Iran's export. But if you factor in the dark web of ghost fleets, conducting ship-to-ship transfers in international waters and altering certificates of origin, the actual import volume vastly exceeds this number, accounting for the absolute lion's share of Iran's total exports. Recently, Russia and Iran have both been slashing grab the Chinese market. But what's more critical are weapons. There are reports that China might provide Iran with carrier-neutralizing tier anti-ship missiles, the C-802, or its upgraded variants. It must be noted that this information is currently unconfirmed officially and comes solely from analyst assessments. If Iran gets its hands on missiles capable of sinking a U.S. aircraft carrier, the Strait of Hormuz truly becomes an impenetrable fortress. U.S. warships would no longer dare to enter easily. This is the reddest of the red lines for the U.S. To understand why Iran dares to today, we have to go back over 70 years. In 1951, Iran's democratically elected Prime Minister Mohammad Mossadegh did one thing. He nationalized the Anglo-Iranian Oil Company, which later becomes BP. At that time, he felt, why should the British profit from the oil beneath our own soil? Mossadegh became a national hero. But the British weren't having that. They teamed up with the US CIA and in 1953 orchestrated a coup codenamed Operation Ajax. Mossadegh was overthrown and lived under house arrest until his death. The US reinstated the Shah Mohammad Reza Pahlavi, and the reward was this: American companies took a 40% share of Iranian oil. The Iranians remembered this debt for 26 years. In 1979, the Islamic Revolution led by Khomeini erupted, and the Shah fled in of Saudi Arabia, and in total, it's only 1.8 million barrels a day. Another difference, the 1973 oil embargo was an alliance of Arab nations targeting the West for supporting Israel. Today, countries like Saudi Arabia and the UAE have long had diplomatic contacts with Israel. They will not initiate an embargo. However, the risk lies in the infrastructure itself. If the Strait of Hormuz is bombed and oil tankers are attacked, supply disruption doesn't need any country's consent. It just happens directly. At this point, you might be asking, after being sanctioned for so many years, how does Iran still have the money to fight a war? The answer is, they have a ghost fleet. These tankers turn off their transponders, fly false flags, and conduct ship-to-ship transfers at sea, selling Iranian oil to buyers like China and Syria. Just on February 27th, the U.S. Department of Justice announced it would seize a tanker named the Skipper, which was detained last December, carrying 1.8 million barrels of crude. This ship had transported oil for the Islamic Revolutionary Guard Corps and delivered 3 million barrels of Iranian crude to Syria in 2024. On February 25th, the U.S. Treasury Department sanctioned over 30 entities supporting Iranian oil sales, including 12 Ghost Fleet vessels that cumulatively transported hundreds of millions of dollars worth of Iranian oil. Why is Iran selling oil so desperately? Because its fiscal health requires oil prices to stay at a very high level. The IMF estimated that Iran's fiscal break-even oil price, the price needed to balance the government budget, was $155 a barrel in 2019. That's 2019 data, factoring in the inflation and the depreciation of rial over these past few years. This number will only be higher now. Therefore, Iran has a massive incentive to drive up oil prices, even if it means taking extreme risks. Now I want to hear your take. Do you think Iran will completely blockade Hormuz? If you were an oil trader, how would you play the market right now? Let me know in the comments. If you care about your wallet and care about where wealth is flowing in this turbulent world, hit that subscribe button. Moving forward, I will continue to analyze how energy, finance, and AI are reshaping the world. This is Hidden Lantern Chronicles. Thanks for watching.